Ever wondered how the pros decide if a stock is actually a good deal? Today I'm breaking down one of my favorite tools for beginner investors, the PEG ratio. If you're new to investing, stick around, because this little number can make a big difference in how you pick your stocks. So, what is the PEG ratio? It stands for price/earnings to growth. Sounds fancy, but it's actually pretty simple. You might have heard of the PE ratio. That's just the price of a stock divided by its earnings per share. But here's the problem. The PE ratio doesn't tell you if a company's growth justifies its price. That's where the PEG ratio comes in. The PEG ratio takes the PE and divides it by the company's expected earnings growth rate. In other words, it asks, hey, is this company's price fair considering how fast it's expected to grow? Let's put that into perspective. Imagine you're buying two different trees. One grows fast, one grows slow, but they cost the same. Which would you rather have? The PEG ratio helps you spot the fast growers that are still selling for a good price. How do you calculate it? Super easy. Just take the PE ratio and divide it by the annual earnings growth rate. For example, if a stock has a PE of 20 and analysts expect it to grow earnings at 10% per year, the PEG ratio is 2. Simple math, 20 divided by 10 gives you 2. But what does that number mean? A PEG ratio of 1 is considered fair value. That means the stock price matches its growth rate. Less than 1? That could be a bargain. Maybe the market's overlooked a rising star. Over 1, the stock might be expensive for its growth and you might want to dig deeper before buying. Now let's be real. A low PEG doesn't guarantee a perfect investment. Sometimes growth estimates are off, or the company's facing big risks. So always use the PEG along with other research like looking at the company's balance sheet, management, and industry trends. Here's my tip: use the PEG ratio to compare companies in the same industry. It's not perfect for every type of stock. Some industries naturally grow faster than others. But for growth stocks, it's a powerful way to sort out the hype from the real deals. Alright, let's wrap it up. The PEG ratio is your shortcut to finding stocks that offer both value and growth. It's simple, effective, and perfect for beginners. Give it a try next time you're hunting for your next investment. And remember, investing isn't just about numbers. It's about understanding the story behind those numbers. If you found this helpful, hit that like button and subscribe for more investing tips. Thanks for watching, and happy investing.